Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a stock called Block, ticker SQ, coming from their previous name Square. And what these guys do, they're essentially a payments provider working with businesses primarily in the small size that need access for the customers to payment facilities, but also working with uh, larger organizations such as restaurants that need a streamlined way to enable all the payments processing. And what these guys have been doing over the past few years, if we have a look here, uh, let's open this tab. So they have struggled in terms of their share price for quite a while, and that can be evidence here, where stock goes listed 2016, keeps going up, and then after the corona goes to almost $300, and now it's currently sitting at 66. So a bit of a massive head and shoulders pattern that it looks like here. However, I think the tide may be turning, and the lines over here are probably giving you a hint already. So as you can see, the stock price hasn't really recovered um, ever since this massive drop starting in late 2021. But the reality is that the fundamentals are turning. So we have revenues that have been consistently growing quarter on quarter. Same been happening on EBITDA, and EPS as well has been improving. So when we have a look at that, we are at the moment kind of a flat line year to date. It's actually up 14% year to date, but as you can see, it's been very flat for the good part of a few months. Now, there are some reasons why that has happened, but I think what is very interesting is that the latest quarter was overall pretty good in terms of quantitative, but we'll talk as well about the qualitative stuff that's happening. So what we can see there, last quarter beat on EPS, not so good on EPS gap, but EBIT still good, EBITDA good, and yes, it disappointed a little bit on sales, hence why, even though the announcement was here, the stock did go up, but in my opinion, didn't realize on the full potential that the company is setting itself for. And that's exactly the kind of the reason why I'm choosing to play this stock. So what happened in that earnings report? Well, we saw some very interesting metrics in terms of the actual business. So we saw, for example, maybe we can see this in the numbers. We saw that revenues are consistently increasing year on year, gross profit margin increasing and accelerating from previous quarters. Same goes for EBITDA. So it's not only the direction, but also the acceleration of certain margins. Um, so overall, pretty good on these things. When we look at other metrics such as gross profit of one of their businesses, Square, which we'll talk about later, um, that has increased as well. Same goes for their Cash App. The operating income increased as well. The adjusted operating income also increased quarter on quarter, again, consecutively. And the net income as well was rather positive. So what is this business about? They have, like I mentioned, the Square segment and the Cash App segment. In terms of revenue, the Cash App brings the majority of the money. Between those two, they make about 70% of sales. And with the Cash App, they have made very, very interesting progress. With the Square segment, they have been doing quite okay too. And I think that the Square segment is going to be bolstered because when we look at what this part of the business does, is supporting primarily small businesses. And we can see here that the business optimism is starting to turn and it's starting to recover. Yes, it's still a long way from what it could be. If we look at the highs achieved during 2021, but it's definitely in much better shape compared to 2022. We seem to be getting out of this negative trend experienced between 2022 and 2023. We have broken out of that, and now there seems to be forming a new direction. So there's one more thing to note about this segment. Like I said, this is primarily for restaurants, retail, um, things like going to a restaurant and ordering a burger, right, in your typical drive-through. Yes, there are other more um, defensive sectors as well in there, such as banking services. But a good chunk of that is very seasonal. And my thought process is that over the next few months, with the typical retail sales seasonality kicking in things such as Thanksgiving, Christmas, etc., many of the initiatives that they're implementing will start paying off. So that is something I think will provide headroom for the stock to continue going up. Now, in terms of um, the qualitative stuff, I mentioned before some announcements made during the earnings report, and I think one of the most important was that the CEO Jack Dorsey, which is the founder of Twitter, is taking the company into a new direction, such as building mining chips for Bitcoin. So he's labeled this as a massive opportunity. And if we click on there, he's talking about, well, he believes that one of the main providers in the sector is not doing a very good job in terms of delivering this product, and that basically his company Block can do it better. So they have made a sale of this chip to Core Scientific, which I think it's JP Morgan estimates that they're going to be able to cash in around 200, 300 million. Now, that is not massive in terms of the current top line of the company, but it is quite interesting in terms of the opportunities that could bring down the line. So with that, not only they are exploring that avenue, but they're also focusing on um, increasing the Bitcoin that they hold. So during the shareholder letter, they mentioned that they hold around a bit more than 8,000 Bitcoins. So that's a fair value of 515 million. And what they've done as well is that they issued 2 billion in unsecured notes due in 2032 to give themselves 10 billion in available liquidity. So it's unclear yet what they plan to do with all that money. But seeing the direction that they're taking, it could point at them deploying that capital to monetize on initiatives related to that, potentially holding more Bitcoin. Let me see if I can find information about that here. Yeah, so as you can see, this is mentioned several times in their presentation. Gross profit on Bitcoin 67 million in the second quarter, uh, which is sold to customers as well. So that's that's rather positive. Now the interesting thing is, let's pretend that this company, currently a payments system provider, gets more and more involved in Bitcoin. We see out there companies such as Marathon Digital Holdings with a PE next 12 months of 60 times, right? This is a Bitcoin holder. There are others, MicroStrategy, which have a valuation that's even way below that. What happens if this company starts getting more involved in Bitcoin and their valuation gets a little bit closer to those levels? So at the moment, and this is one of the reasons why I'm looking at this stock, the valuation for Block is rather low. It's about 16.5 times next 12 month PE. That compared to the sector is kind of middle of the road. And you see what's been happening to some of the competitors. Their valuations have been up. I think there is room for Block to catch up with the rest. Okay, so in terms of management, I mentioned Dorsey before, but there are other very influential individuals at the firm too. So we go to market screener. Let's have a look. Okay. Let me just look up the name of the guy. So there's a board member that has been at the company for more than 13 years. This guy over here. You can see he's been part of Log for nearly 14 years. And this guy is a very, very influential dude. So partner at Sequoia Capital, one of the main VC funds in the world. He has just invested in the month of August 25 million worth of stock. And that follows a purchase of 27.5 million that he completed back in November 2023. So this is obviously a guy that's very well connected, well capitalized, and has inside knowledge of the company, and he's putting money on the line. So to me, that is a signal that he has confidence in the future of the company and obviously sees very, very decent upside on what is going on. So that to me is another bullish point. Now go back to the let's go back to the earnings report. So in terms of next steps and how the company is looking to continue this growth going, they mentioned several times at partnerships. And I wanted to touch on that because they said that they're ramping their investments in partnerships ecosystem. And now they have partnered with some of the largest companies in the food and beverage ecosystem that have critical relationships with up to 40% of the restaurants in the US. That includes as well distribution partners outside the US, so they seem to be pursuing expansion outside internationally, including banks in Japan. And they also mentioned that seeing the strongest returns in marketing investments in several years. So they seem to be efforts that are being made that are going to be paying off down the line They mentioned that all these initiatives as well driving faster their GPV growth. GPV. So you see that's mentioned in a number of places. So what is GPV? I think the term is gross product value, if I remember correctly. No, excuse me, gross payment volume. There we go. So measures the total transaction value, including revenue, fees, taxes. So that is critical for them. Is one of their KPIs, is how they make money. So for them, they seem to be uh, doing the right things to enable them to capitalize and get to that growth. Right. So the earnings of the company are going to be on the 7th of November. And I can see on Sticking Alpha that the expectations seem to be rather positive. So for the upcoming financial year, plenty of revisions up, a little bit down on the revenue, but for a company of this size, that is market cap of 40 billion, that doesn't concern me too much. I mean, it's obviously not good, but it's not the end of the world. And what we see as well is that the earnings for the upcoming quarter have been upgraded 4 to 1. So that is also a good thing. Okay, so in terms of risks and catalysts, the business is exposed to macro factors, specifically the US consumer. Weaker consumer spending, such as weak retail sales, could hurt the company. And also, let's not forget that these guys are involved in the payment sector, which is exposed to greater regulation and competition. So, changes in the sector structural um, pillars could have a significant impact with these guys. That is the kind of problems I would see that the line. However, I think the probabilities and the number of risks are way below the amount of upside catalysts that we could find. So, for example, we have the US election coming in November. We have multiple interest rate cuts. And I think for these guys, that could have a double whammy effect because obviously the interest rates dictate the discounted cash flows of any stock. But for them, like we mentioned before, they are Bitcoin holders and their assets could be propped up if, or better said, when interest rates are cut. That could also alleviate their um, their plans, make their plans easier um, to get into the cryptocurrency space. Of course, we got retail sales. We could see retail sales reports coming in the next few months, a little bit hotter than expected. Let's not forget that we got seasonal spending due to Thanksgiving, Christmas, and so on. And of course, the Santa rally at the end of the year. And that's how I'm planning to play this, by the way, because when we look at the stock, uh, even though, like I said, I'm bullish on this company, let's not forget that it has been flying for a while. But if we see here, it has faced a resistance around 72, and it is sitting below multi-year resistance, right, at 80 right here. So we got resistance 1 at around 73, 75, 80. So even though I do see that upside, you see how that resistance holds up here as well in 2023. This is a multi-year resistance level that is going to take a while to break. It would be required very, very positive news to get above these levels. So I think in the event of positive news, I think that's a likely outcome. It's possible that the stock creeps up to these levels, but then stays sideways for a while before potentially going back up. So the way I would be playing this is through a calendar spread. So earnings on the 7th of November, um, I'll be buying the 17th of January 80s at about $3. Good liquidity there, good spreads, no concerns. And I would sell the December 80s as well. So these are out of the money, but I can do that on a 1-to-1 ratio. As you can see, the credit that I'm getting is quite close to the net spend, and the volatility profile is not too bad either. So I have calculated that here, and as you can see, we can buy 8 contracts on each side, net spend just before 600, but could make that a little bit bigger. And that would provide us, assuming that we stay around the $80 level, 4.5%, excuse me, 4.5x risk reward. That would be the maximum we can get. So of course, let's say earnings come great in November, and I don't know, we go to 90 right away. We still have the opportunity to make 100, but again, I think the probability is going to stay around 80 or below. Then goes to expiry, and then we can either just take some profits or restructure into a vertical if we see that there's further upside. So with that, we can secure reward of between 1.5 times to potentially, if we do really well, almost 14 times. Hope you enjoyed the video. See you soon.